Hey guys, welcome in this new video. I hope that all of you are doing great. So we have a very special video today. I'm really excited to record this one and share with you guys this. So basically what we will do is look at some of the most successful traders of all time, people who had amazing results over the long term, and try to see what is basically the common thing between all of them. And you guys will see that there is actually something very common between those people that you can implement directly in your trading. And that is also how I trade, or at least a big portion of how I trade. And so as you guys know, what I've been doing myself to kind of become profitable and just improve my trading is study the people who had great results for years and years and years and years, and just try to do the same thing as them. And that's basically where I am at today. I'm trading full-time, it's going very, very well. And that's basically what I try to also share and teach in my course. So just before that we start, now please leave a like under the video. I would really appreciate it, and it just would help the channel grow more and more. And also make sure that you are subscribed to the channel if it's not already done. So let's get into the video. So what I have for you guys today is many different chart examples of some of the greatest traders of all time. So we will look at these charts together, we will analyze them together, and then we will try to see what is the common thing between all these charts, and we will talk about it. So this video, as I said, I think will be very valuable for you guys, because I see a lot of new traders not really learning the right concepts, if that makes sense. So I think that this video might kind of open your eyes to what really just is trading and what you should probably focus on. Our first chart right here, as you guys can see, so we have Northern Pacific of the 19, basically, right? That was the year. So weekly chart, so it's an old chart, as you guys can see. And so that's basically a chart from a trade of Jesse Livermore. Now, I don't know if some of you guys know who Jesse Livermore is. I would guess so. For those of you guys who are just getting into trading, you probably don't know who Jesse Livermore is. Well, he was basically the biggest trader back in those times. So it was quite a long time ago, over a century ago, but he was the biggest trader. He made a lot of money. He also lost a lot of money, but that was more because of his psychology and his mindset that was lacking in some space. But nonetheless, even if he lost money a lot of time, he also made a lot of money. So I think that there is still something very interesting that we can learn, which is more of how he actually takes trades. Because if he's able to make a lot of money, it's because that it's working very well. The problem was more his own psychology and when it comes to over risking, but his strategy, we could say, is still very interesting in my opinion to study. So this is one of his trade. And so as you guys can see, I will highlight when I edit the video, we have two places basically where he bought. So the first one being a breakout in September, and the second one was also a breakout in March the next year. And so what is common between these two entries? Now, as you guys can see, there's a lot of things written on the chart. So if you want, you can pause the video and read this on your own. I'll not go through every single thing that is in there. But what we can see with the entry is that he was basically taking breakouts, right? It's not that complex. We have a strong trend that we can see on the market, right? So the market kept going up and up and up. We got a pullback, so a bigger correction. When this correction broke out, he got in the trade. And so that was the first trade. After that, we got a continuation of the trend. We got another correction. It broke out, and then he added to his position. And as you guys can see, the trend ended up going, well, very strong, especially at the end. And that was one of his big trade. So very interesting, but that's just one example. So of course we cannot really kind of generalize something with that. So let's go on and see the next one. Okay, second example. So here it's a bit messy as well, but I will highlight the places that I want you guys to look at. So if we look at the first entry and the second entry, what can we see? Well, the first entry actually is pretty similar than the other chart that we just saw before. It's basically a breakout, right? And what is the second entry here? Well, it's also a breakout, right? So that's pretty simple, I think. And as you guys can see, well, there's really not much to it. Now, of course, there's more explanation. And if you guys, as I said, want to look at, just pause the video and read that. But overall, if we keep it simple and try to see basically what is the entry style and kind of the psychology behind these entry styles, Well, these are just breakouts in the direction of the main trend. So very interesting. Let's continue on and see what we have next. Okay, third example of Livermore. So I will highlight the buy level. As you guys can see, once again, what can we see, right? Well, we had basically a downtrend at the beginning, right? So at the left of the chart, then it started to go back up. We got an impulse, we got a correction, we got a breakout, and this is where he got in the trade. So basically when we had a shift of the trend, so it was trending down, then it started to trend back up. This is where he got in the trade at the highest level when we actually did get the breakout. Now you can see here that he was looking at a cup with handle chart basically. So that is a very I would say famous type of pattern, especially more in stocks. I don't use this pattern personally, but I know that a lot of people are using it, and it seems to work pretty nice, as you guys can see, especially for stock. This is the market where I've seen the biggest use of that pattern, but nonetheless, it is, if we keep it simple, right, the cup handle, it's just that, you know, we had a correction, it started to break out, we got a small pullback, it broke, and he took the trade there. It's really not that complex. It's a very kind of basic pattern, just to say that you are taking the breakout of a correction. That's basically what it means. Okay, another example here. What can we see? Well, once again, we have breakouts, and this is where basically you could have entered in the trend. And as you guys can see, it did go for a very, very long time. It was a super strong market, and so by getting early in these breakouts, well, it can work very, very nice, and you can end up making a lot of money by doing that. Okay, now let's switch characters. So the first person that we did take a look at was Livermore. Now let's take a look at a couple of charts from Seykota. As you guys know, if you have been watching my channel for quite some time, I really love Seykota. I love his mentality, his trading approach. I love everything about him. He's a very fascinating guy. And so if you look at some of his charts, which I found online, and I know that these are real charts from here. So this is really something that we can, you know, take a look at and really see what he's doing. Well, take a look at this one, right? What do we have? We have gas oil, and we are starting to get a uptrend. And so as you guys can see, we have kind of a green line and a red line. So the green line is the entry level, the red line is the stop level. So as you guys can see, what basically this trading is based on, it's trend following, right? We have the uptrend, we have a correction, we can wait for the breakout. If we do get a breakout, it can be a great level to get in the trade, because we might expect the trend to continue, right? Or at least that is the reason why, you know, we would get in a trade that looks like this. Second example, now this is a trade that is already on. So as you guys can see, there's kind of a small triangle on the chart. This is the entry, and then the red line is the stop. So as you guys can see, he got in the trade when the trend was already well established and when we started to get big momentum. So it's not the best level possible to get in the trade, right? So he did not use, you know, fibs or things like that to kind of get a, you know, pullback level. Just waiting for the trend to continue and buy when there is momentum usually seems to work the best, or at least this is what he is doing. And as you guys can see, the trade is in profit and it's still going, and well, that's interesting to note. Okay, third trader. So here we have some examples of Richard Dennis kind of system. Now if you look at these charts, you will see that it's once again pretty simple, and I guess that you guys are, you know, starting to see what I'm trying to get to with this video, so I'll get there very shortly. Stay with me on that. So what can we see with Richard Dennis? Well, we have a new 55-day high, and this is where you could have got in the trade, and as you guys can see, the trend did continue very nicely after that. Another example will be this one. So we have a new 4-week high, and the new 2-week low would be a potential place to get out when the trend might be not as strong anymore. So that is Richard Dennis. I've also talked about him multiple times before on my channel, but one of the greatest trader of the 90s, of the 80s, sorry, in Chicago, and he made a lot of money. And so that is basically some examples of what he was doing and his approach on the market. So he has a very kind of precise system, which is public on the internet. So if you guys want to check it out, you can. But this system now has been proven not to work very well on short term, but when it comes to longer term trend, it can still work fine. And then I thought that it was funny, I included this example. If you guys know this example, it's actually a trade that I took myself. So, you know, as I said, I don't consider myself to be a great trader, right? But I still think that it's interesting to show you guys basically my approach. So this is the silver trade. It was my biggest trade. So as you guys can see, I did a little bit something similar than the chart of Seykota. So we have the entry in green and the stop in red. So that was basically my trade setup, and I wrote the trend almost to the current level. So I got out a bit early. So that is more my style. I'm not a 100% classic trend follower, we could say, but I do use a lot of these principles in my own trading. I've already made a video on this trade anyway, so it's on my channel if you guys want to check it out. And yeah, so now that we have seen all these charts, all these examples from some of the greatest traders of all time, of course I could have included many more traders, many more charts. So we could have taken a look at Paul Tudor Jones, Bruce Kovner, Michael Marcus, right? So there are many other great traders that I could have included, but they don't really have public charts just like the other traders we took a look at together. Sorry, I had trouble saying that. So yeah, so if we look at now all these charts and try to see what is common, right? Well, I guess that you guys can already tell, and I made it pretty obvious by now, but these traders, and myself included, we are riding trends, right? We trade with the trend. So when we have a trend that is starting to form, we wait for a pattern that we know. And so this depends on every trader. As I said, there are different patterns that I don't personally look at. I do consider other patterns. So this is where it kind of changes a little bit between one trend follower and another. But we wait for some kind of pattern. We wait for some kind of breakout, and we get in the trade to ride the trend. That's really the simplest way of how I could put it. And that's really the basis of my trading. I look for trends, I look for breakout, I take these breakouts. There's nothing that is much more to it. Now, of course, when we get to a certain advanced level, there's a lot to it, and it might get a bit more complex than that. So I'm not trying to oversimplify everything. But the real kind of deep concept that is really at the root of my trading is this: I just ride trends. It's as simple as that, And then I will use some other concepts, which, as I said, are a bit more advanced, to tell me when I should get in the trade, where should I place my stop, how long should I ride the trend, should I just stay in the trend or take my profit at an important level. So I have different kind of parameters, I would say, in my own system that I use. So it's not just very basic, simple kind of trend following system. This is not really where I'm at. I have some other tools which I like to implement in my trading to optimize basically my search for trades and where I decide to get out and things like that. But the core principle is this: we ride trends. And so the reason why I thought that this was a super interesting video to do is because I see so many new traders getting into trading, learning concepts or learning kind of strategies or techniques that really don't make sense. It's really like the wrong type of approach. So what I often see people doing is that instead of simply waiting for a breakout and riding trends, they will use very fancy tools. They will put a lot of things on the chart to try to determine the best level possible to get in on the pullback. So they will use support resistance, they will use Fibonacci, they will use different trend lines, different moving averages and things like that, right? Different indicators, a bunch of different things which tell them, okay, I should buy right here, right at this very precise level. It's the best level and I think the price will go back. But the problem with doing that is that oftentimes you will see that these levels are not super well respected because not every trader is looking at the same magic level you think you are looking. And so a lot of times what happens is that these levels are not really respected and new traders take many losses or break evens, right? It doesn't really give them the results that they think it could give them. And then after that, this is where it becomes really hard for them to kind of keep going on this journey. And the deep reason of why that is because their own approach from the beginning is not even good, I'm not saying that it cannot work, right? Because I know traders who, will try to get in at the best level and, ride small moves and because of technical tools and things like that. So I know some people who trade like that. So I'm not saying that it cannot work. But what I'm saying is why would you even go that way? Right? Ask yourself this question. Why would you even go that way? If you study some of the greatest traders of all time, which is basically what we did together today, well, you will see that most of them, not all of them, but most of them were simple trend followers, right? You ride trends because this is what has been working the best for the last century. So you have over 100 years of data, right? And 100 years within where we had amazing traders who simply decided to ride trends and who has proven their amazing results. So why would you just not do this? All right, to me, that doesn't make a lot of sense. So when I started to learn how to trade, I decided to look at these top traders, and this is what I found they had all in common pretty much. They're just trend followers for the most part, right? They don't try to overcomplicate their analysis and things like that. If we have a good setup with a good probability, with a good risk reward ratio, with a good trend, that's a good setup, you know? So there's no need to overcomplicate this. There's no need to kind of try to get the sniper entry, things like that. The best thing to do is simply to get in the trade when we expect momentum to be big, which is usually at the breakout level. So I could talk about this for a very long time, and that's what I do in the course. So of course, in my own course, I go a lot more in details of how I look at these trends, how I get in, how I get out, and things like that. So here, I could not do this on this video. It would take way too long. And yeah, so I'll keep it short like that, even if it's not that short already, but I'll keep it there. If you guys enjoyed this video, please leave it a like. I would really appreciate it. Once again, I hope that you did learn one thing or two with this video, and I hope that I kind of was able to share with you guys, well, what really I think is the best approach in the market and what I think you should probably focus on if you want to get good results. At least this is what I've been doing for the last couple of years, and it has been working very well. So yeah, so on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.